Hello everyone, and thank you for your time. I'm Gary Paulin. I run our Enterprise Solutions group at Northern Trust, which means I speak to CIOs about their allocation challenges. With me today, I'm joined by Mo Al-Husseiny from Venture Capital, Erin Harkless from Pivotal Ventures, Daniel Dart from General Rock, and Mike Giampapa from Galaxy Ventures. There's a lot of things we could talk about, and I'm sure there is one particular topic you'd like us to talk about. We will touch on that in a second. But what I wanted to do is just move out a little bit and start with a little bit of a macro question. Lots of allocators in the room. And I'm going to ask you, Erin, why venture? There's lots of competing asset classes here as well. Why venture in terms of should an allocator think about it? And what are some of the things allocators perhaps might be missing about your asset class?
Yeah, well, thank you, Gary, and good morning, everyone. The answer is pretty simple in my book. I think it comes down to innovation. And we're in a period now, or coming through a period where, frankly, the zero interest rate environment of the prior decade coming out of the great financial crisis, it was, a huge tailwind to venture. A lot of allocators were seeking, additional return and yield, and the private markets and specifically venture capital was a great place to do that. That environment has shifted, and I think a lot of allocators are questioning, does venture still have a role in the portfolio? And it definitely does for a lot of what we're going to be talking about today, to really capture the productivity that we need to grow around the world, but particularly here in the US. Venture remains the category to play that, particularly at the earliest stages, but all the way through to the later stages as well. So I think it's an incredibly exciting time to be allocating and investing in venture. We'll talk a little bit more about some of the opportunities I think that we're seeing, in the market, but it's important to remain consistent as well. I think the biggest mistake, or a big mistake that allocators and investors can make, is retreating from the category when times get more challenging. You'll often then miss out on what might be some of the better vintage years to come, and I think we're seeing that, and really excited about some of the funds that we're backing in our portfolio at Pivotal, and some of the companies that we're investing in as well.
Brilliant, thank you. You mentioned innovation there, and when you look at some of the biggest challenges the world faces, debt, or too much debt being one of them, and there's only perhaps two solutions to that, well, there's three, but we're not going to default. The first is inflation, the second is productivity, and innovation as an asset class is one way of exposing yourself to that. But it seems to have been a bit of a rough time over the last 4 or 5 years for your asset class. And Mo, I'd like to ask you, where do you think we are in the cycle? Have we moved on from the venture winter?
Sure. Well, in terms of the private market cycle, which is probably very different from the public market cycle, obviously very sophisticated people in this room. I don't need to state the obvious, but I will, that public markets are just off all-time highs. Private markets are close to all-time lows. And purely the bifurcation or the dislocation in valuations is a compelling reason to kind of be investing in the space. We're absolutely, in terms of Ventura Capital, experiencing a great thaw in the private markets. I mean, we're a deal-by-deal, co-investment focused GP, generalist tech. I mean, we've closed, in terms of our own investments, $62 million this month. There's already so far in January. We probably wouldn't be saying the same thing last year. And just to give you context, that's one pre-IPO US fintech and one growth stage UK medical technology company. And so across the board, yes, great thaw and lots of reasons to be optimistic.
Fabulous. So we're moving from winter into spring, possibly into summer. And what I like about that is you didn't say that it's always sunny like it seems to be in Miami. There is a cycle, which is great. Mike, you've had a bit of a roller coaster ride as well, haven't you, in terms of your area of expertise? Would you like to just share with folks here where you think we are in your cycle, which I suspect is similar to theirs, but perhaps there are some idiosyncrasies?
Yeah, it's somewhat different. So the macro cycle, the venture cycle, as Mo mentioned, we are coming out of a trough, right, where valuations have been reset, by 60-70% over the last 3 years. That typically takes a few years for companies to grow into those valuations, and we are sort of at the tail end of that, and you're starting to see companies start to go public, maybe, right? We saw ServiceTitan go public at the end of 2024, and that IPO has been well received. Ultimately, what folks are trying to solve, allocators are trying to solve for, is a liquidity crunch, right, in the venture markets, where we need to see more liquidity, we need to see more M&A, more IPOs in order for the machine to start functioning properly again. And I think we're on the cusp of that. My industry in particular has its sort of own cycle in the background, which is the crypto ecosystem, right? And if you've been following that closely, Bitcoin's now at 100,000. Has received a lot of momentum around the ETF products that have come to market in the U.S. Obviously, President Trump has been a very outspoken supporter of the blockchain industry, and so what we've seen is a lot of capital formation come into the market on the public side, but that really hasn't flown into valuations on the private side just yet. There's typically a 1 to 2 year delay on that. So it's an awesome time to be allocating capital in the digital asset space, and hopefully we start to see some of the liquidity in the IPO market that kind of makes everything start to operate more efficiently. Maybe we'll talk a little bit more about the certain characteristics of the liquidity in the digital asset space, which I think have unique advantages to the traditional IPO route.
Just on that, before Daniel, we haven't forgot about you. We are coming to you. We are coming to you next. But just on that, do you think the digital market will follow the same evolution in terms of exits to what other sectors have?
Yes, we are starting to see M&A start to pick up in the digital asset space. Stripe made a very large acquisition of a stablecoin payments company at the end of last year for over $1 billion. Robinhood made an acquisition, and so we're starting to see more M&A. The crypto-specific issues of IPOs, where we've had the SEC and other regulators effectively blocking companies going public in the U.S. We have Coinbase and a bunch of Bitcoin miners, and we don't have other public companies in the U.S. So we see under a new administration that start to thaw, and I'm hopeful Galaxy and Circle and Fireblock and some of the kind of the more prominent companies in our space to be publicly listed companies in the U.S.
Got it. Thank you. Now to the main event. I guess the reason you're all here is to find out where the big gaps, the opportunities and the rising tides are for the next 12 months. And Daniel, I'm going to turn to you because I know that an event's occurred in the last 24 hours that could perhaps reframe, if only from a risk perspective or perspective, how we think about certain aspects of the market. Would you like to perhaps just touch on that and share your views?
Yeah, absolutely. So just to kind of start stuff off, I'm looking at the audience. How many people here are allocated to venture? I'd be curious. Okay. And how many people here work in the venture space? They're a venture manager. Okay. So to kind of frame that, right, we've seen DeepSeek. Everyone kind of is following that. I hope if you're not, then probably not doing your job. But I think to kind of frame it is I don't think of the space in cycles, right? Like I think public markets that works. It's like, hey, where can I put money to make the most money, and what's happening with technology and limitation removals? The rise of the internal combustion engine and power and electricity. We had the advent of the PC. We had, the internet, we had mobile, GPS, and right now we have AI. Like it's gonna radically transform more things than you can even think about, and DeepSeek is a perfect thing. So I think like if you think you're going to capture the AI revolution with NVIDIA at the application layer, like you're just wrong, right? And so we have a short time here, and I'd love to talk to more of you guys after. I think all of us, like we're going to be around all day. I know all of us, come grab us. But to me, the DeepSeek moment, what I've called it's a Moneyball moment, right? Like up until DeepSeek, everyone's like, hey, we have this computer that's the size of a house. We're going to double compute by making it 2 houses. And someone said, well, I'm Steve Jobs. Here's actually a personal PC. Like I'm going to reimagine it. And that's what we're seeing right now. And the easiest way to say it, if you haven't heard this, is OpenAI is 32 decimal points exact. And DeepSeek is, well, what about like 7 decimal points? That's still pretty accurate, right? And it is. And so it's like now we're seeing the compression of that technology, and it's, I mean, God, I'm so grateful to be alive and investing in this space right now. Like there's never a better time, like I think in the history of humanity, to be an early stage fund manager than against the advent of a new technology. Like the Rockefeller doesn't exist. The Standard Oil doesn't exist yet. Like we're going back 100 years. Like that's fucking amazing. Like Sequoia is not out in front of me on AI. The technology just came. Like we're on an even playing field. Their brand is bigger, but they're absolutely not smarter than I am.
Yeah.
And I think that goes the same way. Like maybe you're behind, but you're behind by what? A year? Like that's magic.
Can I jump in?
Please.
To react to something that Daniel said. I think, from the allocator perspective too, in this moment, I'm particularly excited about funds that are, smaller, and we can quibble about size here. But I think to your point, right, like the big brands, and we were discussing in one of our prep sessions that last year, I think the amount of capital that was raised was concentrated in about 8 firms, raised like 75% of capital in venture. That can be true, but there can also be a space to allocate to smaller, more nimble managers. And again, we can define that based on where you're playing at the seed or the Series A. That I think in this rush and what we're talking about with DeepSeek and everything, there's still a role. It's not just the incumbents. It's not just OpenAI. It's not just who has the most capital. I think it's who can smartly find these founders and get behind them, again, at the earliest stages and carry that forward. And the data has proven, smaller funds and often emerging funds 1 to 4, typically outperform. There's data from Cambridge, Stepstone, and others that make that point. So to me, with my allocator hat on, and I wear both, an allocator hat and a direct investor hat, I'm particularly excited about this moment to be investing in funds that, I think are not having to deploy as much capital. Let's put it that way.
Absolutely.
So AI, without question, a key factor, but there seems to be other sort of general purpose technologies coming together in a confluence of ways which could unlock all manner of potential. Are there any other areas that you're focused in, perhaps not just on AI? Obviously, Mike, I know you are.
But I would love to push it, because I think there's going to be a convergence between, and I'm going to say blockchain as a technology, but like now we have deep fakes and all these different stuff. How do we verify this? How do we map this? Like what's the technology to know if Trump said that or Vivek said it? And that's scary. But we have that technology. It exists. It's called blockchain. No doubt. And so I think there's this convergence that to me is like mind-boggling.
You're selling the wrong fund.
I'm selling him too. But what I'm saying is
the check's in the mail.
One more thing is you can own 100% of a raisin, or you can own a slice of a watermelon. Like we can grow the pie. I think there's opportunity for all of us, and I that's why I want to sell their funds. Like you should invest in their funds. 100%.
Before we go to there, because I want to pause on digital in a second. Mo, I'm going to come to you, because there are other areas we haven't touched on that we should be. I mean, who's going to, where's the energy going to come from? Where are the engineers? Where are the electricians? Are there other things we should be focused on and not being?
Well, technology is a broad space. I mean, we can talk all day, and I notice we have 5 minutes left on the.
That's wrong, by the way. I think we've got 10.
I mean, is it wrong? Is it okay?
Well,
that's what Gary told us.
That's what Gary told us.
I mean, look, for the allocators in the room, which is why we're here. It's it's private markets that are going to drive your portfolios going forward, right? Again, we can talk about, I've even got some tech in my pocket if you want to talk about the next big thing, my newest shiny toy. But just before that, take Goldman, for example. 3% CAGR in the S&P over the next 10 years. I mean, I don't think many of the people in the room are going to be finding the portfolio growth that they're seeking purely from public markets. And, that's, I'm incentivized to say that. There are others, like Goldman themselves, quite disincentivized, I should think, to say that. I was watching the PIMCO former CEO yesterday, and again, someone who has zero horse in the race in terms of private markets, just kind of evangeling that it's private markets where you're going to find growth in portfolios going forward, not only for the upside and the growth and, again, the dislocation of valuations, but also our ability to structure your downside and also structure your upside in such a market, liquidation preferences, what have you, are just not available in the public markets. And we're doing that all day long. If you want me to talk about the next big thing in technology, I mean, well, here's one I brought earlier. So
one I prepared earlier, I'm bringing out of the oven. I think you're going to be around all day, so people can have the opportunity to speak to him. What is the technology in 20 seconds?
So I'm very proud of this, and I brought it because we actually led this deal, and the Bill and Melinda Gates Foundation followed it, which is also the progenitor of Pivotal Ventures. And this is the new era in disease diagnostics, detecting early stage cancers from your breath, which is now approved in the US and the
AI,
UK.
top right corner?
Oh, yeah, absolutely. We own the entire data set of the, I think it's the era of small learning models.
So this is your point, Daniel, about the application layer is going to be where the value is.
Yes.
Yeah, I agree with that. Mike, I can't let you go without. So why digital in 20 seconds?
I have the same enthusiasm as Daniel has for the AI space, for the blockchain ecosystem. And the biggest opportunity I see is blockchain saturating financial services, right? Blockchains being used as a modern financial rail to move value around the world instantly and at a fraction of the cost that the legacy traditional rails that were built 50, 60 years ago, SWIFT, ACH, et cetera. There's never been a unified global ledgering system for financial transactions, and that is happening today. Stablecoins now, this is less about Bitcoin and meme coins, and it's more about stablecoins and what we're seeing there. And with $200 billion of market supply currently in stablecoins, that's 1% of the money supply in this country. All right, we've crossed the chasm from being something that people don't understand to, oh, we understand this, it's a huge threat, we should ban it, to now we're effectively exporting the US dollar around the world and our treasuries around the world for people who want to own them. And that is fundamentally different than anything that we've ever experienced. So it's the biggest industry in the world, and we think blockchains are the technology that disrupts that.
I can tell you, one of the questions I was going to ask, ran out of time, was the things that keep you up at night. And one of the things that keeps us up at night working for Northern Trust is we're a centralized form of trust. And I fear that we are being exposed to decentralized forms of trust in your system. So those are the things that keep us up at night. I'm going to finish and bring it back to the real sort of the micro, if you like, in terms of the decision-making process. And because we're talking venture, we're talking people. A lot of it's people with ideas. There's not much more beyond that sometimes. What are some of the key characteristics, traits, or hobbies that you look for in a founder that have led to good outcomes for you? Are there any, and I'll give you one thing that I have done in the past, is I like investing in fund managers that wear eye watches or what do they call it, or similar versions, because it tells me that they're quite data proficient, or they're good at maths, or they're not good at maths and they wear an eye watch instead. But any traits or characteristics that you've looked at that you think? Start with you, Dan.
Okay, I'll jump in. To me, I want active learners. That's probably the most thing, and then optimistic megalomaniacs.
Oh, brilliant.
Like, I want people that are a little bit wild, and like they are just so ambitious and that. And lastly, if you see me around, please pull me aside, say hello, whether you're an allocator or a manager. I would love to meet every single one of you and be part of your community.
Brilliant. Mike?
Competitive edge, and that could look in a lot of different ways, but to found a company, it takes sort of an irrational amount of commitment and competitive edge. So that could be ex-athletes, chess players, musicians, whatever it is, people who want to be great.
Got it. Erin?
Curiosity, maybe a little bit of a riff on Daniel's point. I often ask when we're doing diligence, is just like, what are you reading? What are you listening to? And I think that can uncover a little bit to your point too, Mike, like what is the problem that you are really trying to solve? And are you willing to, go to the ends of the earth to do it? But how you go about that, how you learn, are you constantly reading? Are you constantly asking questions? That's the question I want to
Curiosity. And Mo, last but not least?
Professionalism, obsessiveness, absolute problem solving kind of ability, and frankly, impressiveness in front of each other, because you've got to raise capital and you guys are hard to impress.
So, Venture's where all the growth is. We've gone from winter, we're coming into spring, summer's looking just around the corner, and we're looking for people who are competitive, curious, professional, and outright, what did you say? Megalomaniac.
But optimistic.
Yeah.
Megalomaniac.
Guys, thank you so much. Thank you for your time, everyone. Thank you very much.